Hi everyone, this is Ashley Jamerson coming to you from Ashley Lambert Realty, and today I want to talk about credit score. This is the very first video of probably like a 3 or 4 part series, but today's video is how the credit score affects your home buying power. If you're thinking about buying a home and you're wondering, I have X credit score, what does that look like, or how does that affect my future home loan, then this video is for you, so definitely stay tuned. If you watch my other videos, then you know that I always tell my prospective buyer clients that the very first step to buying a home is getting a pre-qualification or pre-approval, and that means having a conversation with the lender. That lender will have to pull your credit. They can't go off of your word because they do a 3 credit pull. They look at the middle score. They have like a special system. But basically you want the lender to pull the credit so they can help you decide which program is best for you. The minimum credit score you need is totally dependent on what type of foundation loan product you're using. And I say foundation because sometimes people watch my other videos and they feel like the down payment program is the foundation. But first you have to approve for the foundation loan. And I say that there are 5 foundations. There's the FHA, there's VA, conventional, USDA, and then the FHA 203K program for those who find a home and fall in love with a home that needs a little bit of work. Now, all of those programs have their own minimum requirements for whatever reason. Some of them are government-backed loans, and some of them are a little bit more flexible because the borrower is putting more money down, but we will definitely jump into that next. If your foundation loan is the FHA loan, that means that your credit score needs to be at least 580. Now, there are some lenders who will go down to 500, believe it or not. But if you are below 580, they are going to kill you with the interest rate. And we will discuss more into that later. But you definitely want to have at least a 580 credit score to get a better rate or a livable rate. Trust me, we'll definitely get into that. The FHA does not actually give you the loan, like that's the Federal Housing Association. They don't provide the loan, they just insure the loan in case the borrower, you, defaults. And this loan is typically geared towards first-time home buyers. If you're looking to get a VA loan, you have to have at least a 620 credit score. Of course, these are for our awesome veterans. They totally deserve it, but you have to have at least a 620. Some lenders will go down to 580, but again, if you are below that 620, they are going to absolutely kill you with the interest rate. The third loan product that I want to talk about is the USDA loan. Now, the USDA loan is a little bit tricky because you have to live out of city limits. Some people call it the country, I call it home. But you have to live outside of the city limits. There are income requirements. There is a debt to income requirement. There is also a number of dependents. All that depends on how much money how much money they will loan you for the house or how large your loan can be. But you have to have at least a 640 credit score because this is a 100% financing program. The fourth loan program I want to talk about is the conventional loan. You have to have at least a 620 credit score for a conventional loan. A lot of people feel or they believe that you have to have at least 20% down in order to get a conventional loan, but you don't. You can have as little as 3% down, and again, that is completely dependent upon your credit. So last but not least, we have the FHA 203K loan. If you've seen videos, I'm going to keep on saying that. I have so many videos now. But if you've seen my other videos talking about the FHA 203K loan, you know that with FHA and VA, the requirements for the actual house are a little bit more strict. So if you walk into a house and you love the location, you love everything about it, but there's just some type of damage to the property, carpet, paint, needs a new kitchen, something like that, then if you have a 620 credit score, then you can take advantage of the FHA 203K program. Okay, so let's think about it. You want to buy a house, you think your credit or you know your credit is not amazing. Is there anything that a lender can do to help you buy this house or to help you buy now? And the answer is yes. These are called compensating factors, and these are things that the lender will take in consideration during a manual underwriting process. So the first compensating factor that they will consider is if you will be putting down more than 10%. What this creates is called a low loan to value ratio. So that means you have some teeth in the game. You're not going to put down the minimum, but you're putting down enough money where the bank feels confident that you will pay back the loan. And in reality, all this is confidence, is how much the bank has confidence in you as the borrower. Number two, do you have a large amount of money in savings? Some people hit a rock in the road, they hit a hurdle, and they somehow saved a whole bunch of money and they have a really crappy credit score, but they have a lot of money in the bank. Banks love that. Banks like to see that you are not living beyond your means, that you have some excess income to save for later. Let's say you lost your job, they see that there as a reserve. So that's definitely something to think about, is if you do have a 580 credit score, even a 560, or you have a 600 credit score, the bank will take in consideration the amount of money that you have in the bank. Now, this is not how much money you can gather from friends and family with loans, how much money you've saved over time. Another compensating factor is if you have a high income. As you know, a lot of students graduate college with a lot of student debt, student loan debt, credit card debt. They just chase you down with them things on campus. But if you have a high income and very low everything else, those are like the two things, and they're definitely going to take in consideration a higher income. Another compensating factor is if you have a low DTI, or debt to income ratio. This is one of the things that the lender will look at. You can't have a bomb credit score of like 750 or 800 and be maxed out with debt already and then try to get a house on top. So if you have an awesome car, you go on awesome vacations on a credit card and things like that, and your debt to income is really, really bad, you need to work on getting that debt to income ratio off by hopefully paying down some debt, and then there will be a positive compensating factor there for your credit score. But of course, paying down your debt will increase your credit score, so you basically help two birds with one piece of bread. The other compensating factor that a lot of borrowers do not know about and don't think that banks consider is if you've been at your job forever. If you have a long employment history in not only the same field but the same employer, then they will look at that as a huge plus. So if you just didn't move and you stayed there and you want to live there forever and buy a house, that's a very good compensating factor. Okay, so I'm talking about credit. So what is the definition of good credit? And a lot of people, when they think about a credit score, they think of a beautiful arch with multiple colors, and then all of the pieces are equally chunked away. I know this is the credit score ratio thing that I thought about, but actually it looks more like this. You will see that it is poor credit until you get to about 580 or 560. Like, they really feel like that's poor credit, anything below there. So if you have bad credit, it again is anything 500 to 579 or 579 and below. Poor credit is 580 to 619. Yes, you can get a house with poor credit by this definition. However, you see that it cuts off at 619. They do not give you a lot of down payment assistance programs until you get to 620, which is fair credit. So fair credit is your credit scores between 620 and 679. So you don't even get into the you don't even get into the average credit ranking until you are 680, and then from 680 to 739 you are considered fair. That is average, that's what people are doing, that's where you want to be, but you really, really want to be at a great credit score. A great credit score is anything 740 and higher. And what a great credit score means is that you can basically walk into a bank and all those advertised loan interest rates that you see, you will get the pick of the pick. You'll get the best loan product, the best interest rate they can offer, the best terms they can offer, because they don't need to look at compensating factors and things like that. They see that you have good credit. Of course, they're going to pull assets, look at your DTI and things like that, but your credit will set you up to get the best of the best from the bank. If you have a credit score that is 579 or lower, that means that your interest rate will pretty much automatically be 2% higher than the lowest offered interest rate from any particular bank. What this does is it increases your monthly mortgage amount. It automatically takes you out of the running for any down payment assistance, and you'll have to put more money down. So 2% more on your interest means your principal and interest will be higher, and your taxes and insurance will fluctuate with like local stuff that happens, like tax increases or insurance spikes or something like that. If you have a 580 to 619, on average, you can expect to pay 1% more than the lowest advertised interest rate of a bank. If you have a credit score 620 to 679, it's not that big of a bump, but you can expect to pay 0.5 or 0.5% more than the lowest advertised interest rate from any particular bank. But again, if you have that 740 or higher, which is everyone's goal when they want to buy a house, you will get the pick of the litter when it comes to interest rates. And I mean, they basically roll out the red carpet. It's really crazy, but the goal is 740. If you have any questions, comments, or concerns, please leave them below in the comments. All of my contact information will be in the description, and I look forward to hearing from you soon. Bye.